Hey, this is Tim, licensed loan officer. On this video, we're going to talk about preparing for your first DSCR loan. Thank you so much for watching. My name is Tim. I'm a licensed loan officer. I've been a loan officer for about over 5 years, and this channel is just about helping first-time home buyers, building credit, leveling up, budgeting, things like that.
Hell yeah!
If you like those type of topics, please subscribe. Love to have you here. Now, one of my most popular videos on this channel is DSCR loans. So this is kind of like a follow-up video on it. Today, I'm going to talk about how to prepare for a DSCR loan, which is kind of like a sequel or kind of like a follow-up to it. So buckle up. I'll tell you everything you need to know. And by the way, I can help you. So if you're looking to do a DSCR loan, reach out to me. I will have my contact below. I can give you a quote and help you become a property investor. Okay, preparing for your first DSCR loan. Now, the first thing you want to do is understand the DSCR loan requirements, okay?
Okay.
DSCR loans are a type of mortgage that is based on the property ability to generate income. This is important to understand, is that they're qualifying you on the market rent of that property. So you got to buy a property that you intend to rent out. And it can't be a family member. It can't be a friend. It can't be anybody you know. It's a rental property. They're not looking at your tax returns. They're not going to look at your pay stubs, anything like that. Lenders will look up the property rental income and expenses to determine the DSCR ratio. So lenders will look up and do their own research on what they think the market rent is for that area. Okay, so they will do that. And also, the higher the DSCR loan is, the more you are likely to qualify for the loan. Just to give you an example, there's things called ratios. So let's just give you an example. Let's just say the rental or market rent is $1,500 and your payment is $1,000. That's like a 1.5 DSCR ratio. And if it's lower, so some lenders have a little bit lower debt to income ratio, debt servicing ratio, and some have a higher. So number one, just kind of understand how DSCR loans work and then the requirements. Number two is that you want to get your credit in good shape.
Oh my
While
God!
DSCR loans are not reliant on your personal credit score as a traditional mortgage, they're going to pull your credit. And sometimes they don't even pull your credit. And sometimes they just do a soft credit depending on the investor. They just want to make sure that you have decent credit, that you show some financial character, you know what you're doing. And what I say is anything above 640. Now, you will see some things online that say you can get it at 620 or things like that. But most of the time, lenders want you to have decent credit. They want you to, just show you have good credit. So make sure you have your credit in line. It's still important to have good credit. And then a good credit just helps you qualify for a lower interest rate. So when they look at your credit, they're going to basically determine that rate based off of your credit. So the rate determined off kind of your credit, but whether you get approved also requires that rental property, what you can charge in rent. So check your credit. Another thing, this is very tough too, have your down payment ready. So most of the time, you're going to need at least 20% to 25% plus your closing costs for the down payment. Now, the higher your credit is, I have seen some people with excellent credit, like 740 or higher, only required to put 15% down. But generally speaking, most of them are going to want 20 to 25% down payment. And that's a lot to bite, especially if it's your first DSCR loan. That's kind of a lot of money there. But remember, you're doing this to make money. And then some lenders, like I said, do lower down payment options. And lenders require the cash reserved for 6 months. So this is another thing very important, that most of these lenders will require something called reserves. Reserves mean they just want extra money sitting in the bank for that mortgage payment, sometimes at least 6 months, some are 3. Most of the time, I would lean towards 6. So on top of your down payment and your closing costs, you're going to need some extra money sitting there. And that's for a couple of reasons. What if something pops up where the home needs to get fixed? You got to fix it. What if the tenant moves out, no one's living there? You got to pay that payment until you find another tenant. So they want you to have a little extra money reserves. So get your credit in line. Save up some cash because you're going to need that down payment plus some reserves, some extra money. Now, you want to choose a property with a high rental income. This is very important because lenders will research that market rent, okay? So make sure you find a desirable spot where you can charge rent. The higher that rent is from your mortgage payment, the better your debt servicing ratio will be and the more likely you'll qualify. Most lenders consider 75% of your rental income. Now, this is another thing important, is that lenders don't give you 100% of the rental income because they know, there's maybe an HOA. They know that you may make some repairs. So sometimes lenders are conservative where they only give you 75% of the rental income. Again, this depends on the different lenders. I've seen lenders do 100%, some do 75%. But remember, if you have a high rent compared to your payment, then you're okay. Now, the rental income is what qualifying you. Yes, the rental income is what qualifying you. The higher that rental income is, the better the numbers look, the more you're likely to get the loan. The next thing is you want to get pre-approved for the loan. And preferably, you want to get pre-approved for the loan before shopping around for the property. I see a lot of people do it opposite. They're talking to realtors, they're looking at properties, they're running numbers, and they're not pre-approved. Try to get pre-approved with a lender first to determine what you can buy and your buying power and things like that, the payment. That's going to really help you when you shop because now you know that the rent needs to be this amount and can you charge that for the property? Don't work backward, work smart, okay? And like I said, it'll give you an idea how much you can borrow. Also, your monthly payment will help you determine the rent. So if you see a small property and you don't think you could charge X amount of dollars for rent, then you might want to pass on that. But you'll know that from your pre-approval, okay? Next, you want to work with lenders who specialize in doing DSCR loans. There are lenders that do DSCR loans, and that's all they do, like fix and flip loans, bridge loans, construction loans. That's your type of lender. These lenders are familiar with the requirements of DSCR loans, and they do it better. Now, a lot of lenders say they can do them, but it could be a mess because they just don't know the specific investor guidelines. Every investor guideline has a little bit slightly different rules. So it's good to work with someone that does this. And you could easily just do a quick Google search of DSCR loans. Some ads will pop up and take a look, or reach out to me and I'll help you with it. And they'll help you with the best loan that meets your needs. And I do recommend talking to maybe 1 or 2 lenders just to compare the requirements. To give you an example, one might require 6 months in reserve. One might only require 3 months in reserves. So one might have 20% down payment or 15%. So it's always good to have a second opinion. And it's good to understand the rules and things like that. And that's what a good lender will do. They'll explain to you what we're doing and what are the requirements to qualify and help you with it. Now, lenders that help first-time home buyers, a lot of banks and things like that, these big lenders, they don't do DSCR loans. Don't even reach out to them. You're wasting your time. They're going to give you a conventional mortgage. And a conventional mortgage means you're qualifying based on yourself. The next thing, like I said, shop around. You want for the best interest rate and terms for your needs. And also DSCR loan interest rates and terms can vary from lender to lender. Yes, they vary to vary. These are what we consider non-qualified mortgages. So non-qualified mortgages means they're not regulated. They're basically investors that set their own rules and guidelines, and you have to conform to those to get the loan. And then ask what is the ratio, the estimate payment. So shop around a little bit. Like I said, don't go crazy, but talk to one or two and see what some of the requirements is. The next thing you want to do is have your documents ready. And this is very important because a lot of times people contact a lender like myself and they're not ready to go because after we run the numbers, you like it, I like it, where's your documents? So have your documents ready. And what they're going to need from you is your ID, your assets or bank statements, the same thing, and then LLC. So you're going to need some kind of business setup, whether a corporation. Most of the time it's an LLC. That's the easiest to set up. They're going to put this in the business name. This is not going to be in your name. So have these ready. Now, before you close, you will need some more documents like your property insurance and a few other documents. But when you get pre-approved, make sure you have your ID, your assets to prove you have the money for the down payment, and then your LLC set up. And then be ready to close quickly. So these loans move pretty fast. Like it pretty moves fast, you know. After you fill out the application, you get your documents, you submit an offer. A lot of times these are distressed homes or people want to get rid of it. So they move pretty fast. And these DSCR loans can close as little as 30 days. So after the appraisal, it could be pretty much wrapped after we have title. It could go pretty quick. And then number 10, make sure you can afford the monthly payment. This is important because if anything happens where the tenant runs into trouble, whether you got to evict them or they move out, you need to make that payment for a couple of months until you find a new tenant. So make sure you don't get something that's overreach or be over leverage. Factors in all your expenses, including your mortgage payment, your taxes, your insurance, and maintenance. Thank you for watching. I wanted to make this video quick and to the point, and I hope these tips help you. Now, there's a lot more things to know about DSCR loans. If you have specific questions, you can comment below. Also, if you're in the market for a DSCR loan, contact me. I'll put my information below. I would love to help you with one. And again, thank you so much for watching. I'll see you again in the next video. Thanks.
That was legitness. Yeah, it was, huh?